So good for us. Welcome, everybody, to the final amazing day of the Power Lunch for Real Estate Pros. I want to thank all of our real estate investors who have come, whether it's been one day or multiple. Thank you guys for showing up, and thank you to Sheena, who's going to present today and has been such a great, awesome audience member throughout the week as well. So thank you for that support, and I'm excited to hear what you have to share today. And guys, I want to make sure everybody knows. All five of these presentations are going to be on the YouTube channel as a playlist. So if you are live and you missed some, go catch them later. And if you're watching this right now and you've stumbled across it on YouTube, this was a part of a 5-day Power Lunch series, and we have five different videos about different real estate investing topics that are all awesome little 45-minute grab in your lunch education opportunities. So check out, there will be a link below in the description where you can watch the entire playlist. And without any further ado, Sheena, I'd love for you to come on and share with us about these five CFO secrets.
Yes, definitely. Thank you. I'm going to go ahead and screen share here and get this pulled up.
Looks
All
good.
right. Thank you. So today I'm wanting to pull back the curtain on how you can cut your taxes and increase your profit and actually feel really in control of your finances. Without knowing your numbers, there's a lot of uncertainty, and that's where the stress comes. And that's what I want to help give clarity to. And just a quick disclaimer. So even I am a CPA, I've been doing this a long time. This was my 16th tax season, but every situation is different. And so when we talk about different tax advice and situations, just want to let you know that you want to take that and talk with your CPA yourself as well, but know that there's strategies and things out there that we'll talk about. But this is for educational purposes. So we'll jump on in. So most real estate investors are incredibly great at what they do, either getting in, you're growing your portfolio, but when it comes to money and taxes and the strategy, it feels like a mystery. And that mystery is expensive and it is pretty common. I see these problems. Just chatted with a client yesterday and same thing. They're very educated, they're good at what they're doing, bought a multi-million-dollar property and then has no clue what to do with the accounting. So that leads to cash flow management issues, as noted here, tax surprises, big tax bills if you're not planning for income coming in, especially flippers, the no tax strategy to go with that. And sometimes too, not in the right entity. The one tip is almost guarantee you don't put rental properties in an S corp. Well, you don't make them subject to self-employed or to the payroll taxes that a S corp has to adhere to. So there's just certain things, or should you be in an S corp on the flip side if you're, say, a flipper? So those are things that you really want to be talking with your accountant about. So something, and since we were all kind of chatting before we got going here, is what would you do with all the time that you got back if you weren't stressing about your finances and ultimately your taxes? Would you take that vacation? Would you buy that next property or hire that next person, especially VAs, to help take more time off of our plate? Those are the things that you could be making decisions with and actually moving forward if you know where your finances stand. So it'd be fun to drop in the chat. What would you do? What would you do with more time without spending on your taxes and your finances and stressing on them ultimately? I'll give you a moment there. And then we will jump on here. So why does this matter now? Well, if you're making money, but you don't know where it's going without clean accounting and consistent financial reviews, most investors are flying blind. Profit is leaking through hidden expenses, bad decisions are being made, or missed tax opportunities. And you won't know typically until it's too late. If you're waiting till end of December, especially, or until next year, there's not a lot that you can do retroactively. So you're playing defense at tax time. Most investors hand in their box of receipts, hopefully not that really, but you've got your spreadsheets or things like that, and you're handing those over and hoping for the best. But by then, like I mentioned, it's too late. So what we're going to dive into is those 5 CFO secrets and why being proactive with your books and your taxes will get you further along. The third point is you're scaling your business without a CFO mindset. I loved Adrienne, you talked yesterday about the mindset of hiring. Those are things like we have to get in the mindset is think of yourself, of course, most investors are wearing all the hats, but make sure you're wearing those really important hats, CFO, CEO, and treating your business like a business. So before we dive in here, we'll cover what those 5 CFO secrets are that those top level people are using, those top level investors and business owners to run lean and profitable books. So first we'll go over accounting. So accounting, if your books are messy or outdated, it's nearly impossible to know and make smart investment choices. You can't save on taxes if you don't know how much income you're bringing in, or vice versa with deductions. So clean, accurate books are the foundation of everything else. And a lot of these, I would say, first look, I feel we all know these need to be done, but it's how do we do it? And that's what I'll be getting to. So next we'll talk about the critical need to keep the separation of books. So you need to keep, and it's noted here, business, but again, real estate is a business and you want to treat it like that. You need to have a separation of your personal expenses, checking accounts, credit cards, especially. I had a client, for example, tell me that they were using their personal credit card and not their real estate checking debit card because they worry about fraud. And I understand that, but that's where we need to get a credit card for the real estate so that you can use it, but not be running it through your personal credit card as well. And when we talk about the software and reconciling, we'll see how that all plays in. So then we'll move into your monthly financial reviews. This is your opportunity to course correct. This is where you're going to go through and make sure things are categorized in the correct places. You're going to be looking at those financials in a bigger picture. If you see that you have overspent on repairs, and of course they're necessary, but maybe that's a property that you need to consider selling or making some changes so that those don't keep pulling all of your income out of that property as well. And then we're going to look into tracking KPIs, so the key performance indicators that tell you what's working and what's not. You know what you track has progress, right? Great example is if you're trying to get in better shape, I always suggest you weigh yourself on the scale, right? But otherwise, you don't know what is working. Is your diet working? Is your exercise? If you don't see that progress. Same thing for your books. And finally, we'll talk about CEO days. This has been my new fun one I've been really trying to implement is setting aside time, and it doesn't have to be a full day, but to be the CEO of your business. This will really help to give you that focused time to do all the things we're listing, and we'll go into detail like what an agenda would be. It's your high level time to plan, to look at growth, to look at last quarter, to plan for next quarter. So those are times to really see changes happening. So in real estate, your numbers are everything. And investors that are operating with messy books, they're really, like I mentioned before, flying blind as far as where they're going. It's a great example is like driving across country without a GPS. You wouldn't just start driving and hope for the best. It's very similar with your accounting. Accurate, organized accounting isn't just a box to check at tax time. It's your throughout the year, monthly, hopefully more than that, time to make very informed decisions with what you're doing. And from a tax strategy standpoint, if your numbers are wrong, then the whole tax plan would be wrong. That's where the surprises come in. Everything can get thrown off, and it just starts at the foundation of getting your books in order. So, and again, we're going to dive into what does that look like here. So that's probably how you got what you're wondering is how do you get clean accounting and clean books? Hopefully you get to the point where you're able to have a VA or bookkeeper, accountant, a CFO doing that for you. But you do want to understand the workings behind it. I know there was questions this week about setup and which softwares to use. So I recommend Stessa or Baseline. There's a couple other ones coming in. It's great where you can tie in your tenants can deposit rent checks that way. Some are even linking up where you do background checks. You can do other different things as far as because they're just for your rentals. I don't recommend QuickBooks. It's more than you need for a rental property. And also you want to have a different set of books set and also separate checking accounts for each property as well. So that's something very important to keep in mind. And with that, we have monthly reconciliations that we're wanting to do. And just curious, who's doing monthly reconciliations and feeling good about it?
I'm supposed to be doing the monthly.
Supposed, yes. So glad you're aware, right? That's awareness is a big step. So with the bank reconciliations, that's one of the biggest things I see missed. There's a lot of thought that, especially with QuickBooks, is you just link your bank account and let it do its thing. One thing with QuickBooks and AI, it is getting good. It can read you spent money at Home Depot and it thinks maybe this is repairs and maintenance. But I will let you know if you go in and say miscategorize it, QuickBooks updates and says, you said that was meals last time, so now it's meals going forward. And you think it's running along doing things correctly. Well, if a bunch of Home Depot tenant repairs or property repairs are going through meals and you give that report to your accountant, year end, you only get 50% of that deduction because meals are 50% limited. So that'd be a great example that you just can't set it and forget it. That's where the next part coming in, the categorizing those correctly, looking at it and making sure when you do the reconciliation, you have your bank account open on one screen or one side of the screen and you're seeing, okay, you're checking those off, just like the good old days, I guess, where you do it in your register and you mark it down that you wrote a check or you bought something. And you want to be doing that in your bank accounts software or your accounting software as well. And then you're going to catch those. The other big one I see is that you may fund the account. Let's say you did have big repairs and you need to put some money in to cover that. That QuickBooks typically will think you putting money in as a deposit is income. Rent is typically what it is, right, for a rental property, and it will mark it as income. And so you have to make sure you go in and say this is an owner contribution. And this is very important too. I mean, who wants to pay taxes on money they put into their business, right? So that's a big one I see as well, where income's all of a sudden more or deductions are not being categorized correctly, so they're being missed. Those are a couple of the big key areas. Any kind of questions on that so far? I want to make sure, because I know this is an area of not everyone's favorite, but it's so important for everything else we're doing. And let me see if I can see the chat over here too. Or Adrienne, let me know too if there's anything
Yes,
I need to.
there's no questions in the chat. Yeah, no questions. I think I'm following along well.
Okay, great. Thank you. All right. So the other part, and I did touch on this before, was no personal expenses mixed in. A great example too, besides we want to keep them separate, is I had a new to me client that the previous bookkeeper started marking everything as an owner draw because they thought, well, why would you be buying that particular item when they didn't see the business use? And so they just started marking them as draws. And the client's going, I feel like I had a lot more expenses for my business. And we reviewed them. And yes, those should be business deductions. So the reason that came about was previously that person commingled things. And so the bookkeeper, I think, got fed up and just was like, most things are going in draws if it doesn't look strictly business. That's an area, like if you don't get those deductions, you're going to pay more taxes. So the other part of it. Plus, you're going to pay your bookkeeper more for trying to filter all those out, or your CPA at the end of the year to try to clean that up. And you're also making more work for yourself because if you're doing your own books, now you're having to clean that out as well, as opposed to just the business ones. And then again, it can open you up for issues if you were ever audited, where there's all these things mixed in. If the IRS starts feeling like, if they're looking at it, that it's not really being treated as a business, they may feel like the bookkeeper and throw it out as well. So those are all some main reasons to have the accounting done with monthly reconciliations, getting everything categorized, and keeping personal and business separate. So I've got a just a screenshot. This is from my Stessa. And I just wanted to point out if for anybody that's using spreadsheets, is all you have to do is click the category and then you're selecting what category it's for. So I left a few uncategorized here as an example. You can review the transaction. It would come up with the different property addresses too, if you had multiple ones, which you can link those all accounts in there. And then you're looking at the transaction and being able to mark where that's at. So it makes it really easy as opposed to trying to remember, oh, I bought that at Home Depot. Now I need to go put that in my spreadsheet, or where did that receipt go? And now you're missing deductions. And I'll jump over here and it says, let's see, Julie has a question. Our issue is using money from one business in the other business, and we need to get better. Yeah, that's a big one thing too, is the transferring and going back and forth. You want to set those habits up, especially the sooner the better. If you're a new investor too, get on the right track to do that. And not the transferring causes a lot of confusion, even for bookkeepers, I've noticed too. It causes confusion for yourself, and things can be, if you're depositing money, like that example I gave, it could be incorrectly categorized as income, and we don't want that.
So can I do a follow-up with that? So if
Yeah.
we've got two Airbnbs or two short-term rentals and we're using the credit card like for one, but we're going to Costco and buying toilet paper, but
Mhm.
we're using that for both Airbnbs. How do we decide where that goes? Do we just do it one on one time and one on the other time? Because we're buying bulk for both.
Mhm. So one of the ways to do it is you could at Costco, they let you do more than one order, right? Like you can say this is business and this is personal. You could say this is Airbnb 1 and 2 to separate them. That would be a clean, easy way to do it. Or if it was that giant box of toilet paper, for example, like you mentioned, and you don't want to have that, one in each Airbnb, you could go into Stessa or other software and split that. So if you divided completely, there's a little button in the transaction, and you would split it, and you would just say half goes here, half goes there. I think the splitting the order would probably be easier, but that the splitting the transaction would be your next best step. Because it is harder to get multiple credit cards for each rental property. I do definitely understand that. Does that answer your question?
Yes, thank you.
So, yeah. Um, so this is a report then from Stessa. So I just cut off the name, so the property's privacy on there. But to give you an example, and also I like to share with clients why we need to be doing this, not just do it because you're told to do, right? The reason we need to keep things separate by property is so important is the IRS requires it. So this is very similar to a form on your tax return. If it's your personal tax return or a partnership, each property, so the property name is going to be on top here. You're going to have the income and then you're going to have the expenses. And where it comes very important on the taxes is each property then is evaluated. Do you get to take that loss that's generated? Because typically rental properties are considered passive unless you have real estate professional status, which hopefully you do as a real estate investor, or you have a short-term rental and you have the ability to use the loophole, which is a great way to offset like W-2 wages. But if you, at the end of the day, your property has a loss, it has to be evaluated before that's determined. And if you can take that loss, and if you can't, then it accumulates until you can sell the property or offset it with a loss in the future. So that's the important background of why we have to keep things so separated. And like I have a client that's working through, she pays her utilities all in one lump sum. And I was trying to explain this concept and I was like, I know it's frustrating. I understand that it's extra work, but this is the reason why is we have to have everything dialed in by property, which is why separate bank statements for each is the easiest. So jump on here. So again, knowing your numbers and having those clean books is the first step to tax planning and better cash management and overall reducing that stress because you're not having to go back and forth and really trying to determine what did you do with that purchase. You can really get that cleaned up and start saving a ton of time. There's work up front with switching to an accounting software, but in the end, it's quite a benefit there. So let's see here. So planning for liquidity, that's also a very important part with real estate investing. You need to make sure you have the bottom line net income from your properties, especially if you're in flipping or a realtor for investors as well, because you need to know too, setting aside that money for taxes or what you need to be doing, and hopefully setting more aside for planning to fund your next project. Also anticipating market changes so that you can be setting aside ideally a rainy day fund for each of your properties, just like you do for yourself personally, hopefully. You don't know when an expense will come up, an AC unit goes out or things like that. And you're wanting to know, can you separate that and start creating that rainy day fund for yourself as well and your properties. So it's going to streamline your decision making and also giving you that clear process of moving forward. All right, so secret number 2 is standalone, but I touched on it quite a bit on that last one. It seems obvious, as I've mentioned it several times too, but having personal and business separate is vital. So I see where even experienced investors will slip up on this, grab the wrong card or not have that right card with them. And typically it's not a good chance that that expense gets accounted for. And so that's where you're going to be overpaying again in taxes if you're not getting those expenses accounted for properly and keeping that separation. It's also can cause issues with you go through all the work of creating an LLC for your rental property. You've got it thinking if there are any issues, you've got it separated now. So, but if you've got personal expenses in with your business, with your real estate, it's, if you've heard of the term piercing the corporate veil, you're not treating the business like the business it is, and that LLC can be voided in that terms. That's a terrible thing to see because there's not, you're commingling funds. So some action steps on this is separate your bank accounts, get dedicated business cards for your business, for your rental properties, one for the rental properties, and then splitting it like we've discussed or having those separate orders. And then being very careful to document owner draws and contributions. Like I mentioned with that example, is the software can incorrectly call those deposits income, and it can definitely throw off your planning. So with that, cleaner separation equals more audit-proof tax deductions. It's easier to track those expenses. And my example here, a client with personal charges mixed in, I touched on this one before, was they missed out, and this was a big number, $18,000 of deductions because they had commingled at one point. Their bookkeeper couldn't tell the difference and was excluding a lot of expenses. Those are numbers you don't want to be seeing, and have your CPA not do the full due diligence of looking through your owner draws and saying, should those be business deductions? Most CPAs at tax time will not take the extra time. It's unfortunate, but I want you to be aware you have to be your best advocate and work with a CPA that keeps you best in mind. So number 3, reviewing your financials regularly. So I have a question for you. Would anybody here wait until December to ask their tenant to pay them rent for the year? Probably not, right? You're going to be getting rent monthly and making sure you're getting it, right? You're checking that rent deposit's done. You need to be thinking about your bookkeeping and your finances in the same way. One of the ways too, what if your tenant didn't pay you and you weren't checking because you had multiple rental properties and you didn't catch it quick enough too? So that or other missed deductions. So it's just something to keep in mind. And this is where we're going to talk about the CEO days. Set that time in your calendar, just like I'm going to start setting time in my calendar to work with my VA so I don't not delegate them what I need to do, right? That's the mentality that I'd like you to maybe walk away with is don't wait, just like you wouldn't do with anything else in your business. It lets you catch those errors early, identify red flags, and take advantage of tax planning. A great part is we've got the bonus depreciation back. Do you need it? Should you be buying a property if things look good and you have income to offset? You don't know those if your numbers are not in order and you're waiting till year end to do all your bookkeeping, or you just hand it to your CPA and hope for the best that way, right? So yeah, getting a review of that. And I think too, it's helping you not be so afraid of what your profit and loss looks like and starting to ask deeper questions and reviewing them. I had a client review, so she's a CFO client months ago. We started looking at like, your income's down is the fluctuation in the market, right? But her expenses were just going through the roof. And so I did a gross profit percentage calculation for her, and it was tripling the expense of what she was doing last year. And her houses were sitting longer. And so she was paying for the staging of those, and now the house is sitting longer and she's buying more items so that more things can be set up and staged, and then they're not selling like they should be. And so we started talking, and I said, you need to probably go after more buyers so you're not having so many holding costs. Start making your sellers cover that, or don't offer at all, because you're going to be in the red in the next few months if this trend continues. And she had no idea, of course, until we had that meeting and we could really discuss and determine that was the issue. So it's just an important reason to go through that. So some common pitfalls, as I mentioned, is waiting till tax season, operating blind by not looking at your numbers, and missing quarterly adjustments. Wouldn't it be great if you had an estimate from your CPA for quarterly payments? And reminder, September 15th is coming up here quickly. If you make quarterly payments, that You could adjust it down if your income was down, or you needed to adjust it up because your income was, you're doing great and your deductions were down. And yes, you need to adjust your payment more timely. It also helps too a bit because then you don't have that big tax liability at the end of the year that hopefully you've got a strategy for. But those are the things you want to be knowing and doing it on those quarterly dates. The other part is the IRS has really increased. I don't know if anybody's been surprised by this, but if you're not getting your quarterly payments in, then they're really upping the penalty on that. It used to be, well, it's $50 or something small. It's hundreds to thousands now. They aren't, they want their money sooner. So the best way is to have a strategy to pay less in or make sure you're aware of what you need to be paying in. So let's see here. As far as monthly reviews go, thinking at tax time or thinking of your review only at tax time, like I mentioned, is only causing you to lose more money. And those six-figure mistakes, and I've seen it happen, were because you weren't looking at your books mid-year, this time of year, right, and really getting a game plan for the rest of the year. So one of the examples I have down here, this $45,000 in savings, I had a client really increasing her income, and we made the adjustment she was a realtor to move to an S corp election. $45,000 in savings, you're getting away from paying that self-employment tax, and then also working with her to run it properly in all the other ways she can get deductions as well. So any of you use like the Augusta rule in your business for a strategy? Or have you heard of it? Yeah, S Corp's definitely a big help. Yeah, so the Augusta rule is where you can, works great for S Corps, especially if you've got your service-based business, flipping or realtor or property management as well. And as for real estate investors, you can weave that in too, where your business is renting your home from you. The great part, and we hardly ever really never see this on any other deductions or strategies, is you can get the deduction, but you don't have to claim the income if it's under 14 days. So the Augusta rule came about where people were renting their home for the Augusta golf tournament that happened every year. And so they'd rent it out but didn't, a minimal amount of time, 14 days or under, and they didn't have to claim the income. Now, you also don't claim expenses if you're not claiming the rental income, but where it has been a great conversion is you have employees or other colleagues. A client of mine has a book club monthly to get new clients coming to her, and she hosts that at her home, and she provides dinner, and she gets to take that deduction. You would go and look at Airbnb and other comparable places to rent, maybe a venue if you have a pool or other fun amenities as well. That nightly, or you could look at it, a daily rate. It could be $1,000 potentially, depending on the time of year. And you get that rate times up to 14 days, business deduction, no income. So you definitely want to have all the documentation in order to be taking that. But that's a great one to be doing. You want to be documenting minutes and what that meeting was all about. So that's a good one. So let's go into
So
your, oh,
I had
yeah.
I didn't mean to interrupt, sorry. I have a question about that specifically. So if we did like we did the quarter 2 meeting for our business. So I have a business with my siblings, and
Mhm.
so they flew in from Alabama and they stayed with me in Nevada, in Las Vegas. And so we did our quarter 3 meeting at my house. Would that be considered for the Augusta rule? And what
Mhm.
documentation would I need to justify that?
Yeah, you'd want to document who was present, that what the home was used for, your quarterly meeting. I would document a few of, not like detailed minutes, but some brief notes about it.
We did meeting
Yeah.
minutes. Yeah.
Okay. Yeah. And so then you're wanting to put in the date, of course, as well. And then then looking at that comparable um, rate as far as you need that in your documentation as well. We can't just go, $1,000 seems like a nice number, right? So you want to go and look, and I take screenshots or print to PDF where I said, okay, this is a comparable property at that time of year. And if I had to rent a space, then this is what I'd pay. So this is the rate I will use. And that would be your documentation.
Okay. So retro, I'm trying to think how to do that with like Airbnb, that kind of thing to go backwards.
I would say you could go to next year's and look at it too, since, yeah, you can't go back in the calendar.
Hmm.
And you could also, I would pull in venues too to say, look at hotels or, gosh, I am meeting with a realtor from Southern Idaho. We're starting to grow the Northern Idaho chapter, or get the word out for her conference coming up. And so I was calling around to breweries, and one of them was $1,500 for their meeting space for 2 hours. So you could use that as well. You just need a comparable and document where you got that.
Okay. Thank you.
Mhm. And then do more meetings in the future, right? Yes. So yeah, great question on that. What I love too is, and I wasn't getting into this in this presentation, but I'll kind of highlight another strategy is you can have your siblings too, if they're not working with you, or friends as board of advisors. There's, of course, documentation we want to get into, but you could have a quarterly retreat as well, go somewhere fun and have that be a business deduction, working on the business, right? So you're masterminding with them or with friends or other women business owners as well. So you just want to be thoughtful and go, what I'm doing, can I make it be reasonable and necessary for my business? And weave that in. So great questions there. All right. Well, moving on here. So have question two for you, kind of thinking about this and why KPIs are important is, have you ever felt like you're working nonstop, bringing in the money, but still have no idea where it's going? So that's because revenue can be a vanity metric in ways. You want to be looking at your profit, which is your revenue after expenses. Going back to why you're counting and looking at those on a monthly basis is so important. You want to be knowing your cash flow, and looking at those KPIs as your GPS, like you're driving the car, right? For that example of where are you going and are you making those changes? As soon as for my business, I would say, as soon as I started putting quarterly revenue goals and I put it on my wall and I was looking at it diligently, I started hitting those goals, which was really exciting because I was making that my focus. And I wasn't just going, oh, at the end of the quarter, I hope I got there, right? I was going, no, it's there. Now I know where I need to be going in a much more structured way. You want to be looking at this at revenue per property, and the tax savings piece that comes into it, your cash on cash and your cash for the future. And so something I've been looking at too is like properties are having some challenges, short-term rentals, right? We've had to drop rates. We've had expenses go up, especially if you've got a property in Florida and they're getting all those insurance increases. So you want to be really keeping an eye on those. Maybe you need to be shopping around. Maybe you need to, for a different insurance carrier, or really reviewing why do you keep having the same expenses come up at a particular property instead of just, oh, I'll send the handyman out again, or property managers taking care of it. You just want to be looking at them and getting more diligent about those KPIs. All right. So again, why does this matter? You're catching over spending, like my example with expenses increasing and profit going down for my client. As then knowing your numbers, meaning no more panic at tax time. I don't know anybody would like the sounds of that. Not fearing tax time, into it confidently. And then also saving more for retirement. Your financial freedom number too is, are you setting aside the funds you need to and diversifying how you need to be doing that as well. So knowing your numbers as on your own, and then sitting aside with hopefully your board of advisors, your CPA, your financial planner to know what you should be doing next. And I like kind of the notes that I made here, because when you double down on what's working, or when you know what's working, you can double down on it. And that was my example of getting very focused on my KPIs. I love numbers that way, where I could work backwards and go, okay, if that's the revenue I'm needing, or like we're looking at it by how many doors you're actually needing, or is one property, yes, taking all the expenses and you're having to cover, the other properties are having to cover your business. You really want to be catching those sooner than later. Okay, so CEO days. This was, again, like I said, the fun one I've been working on. If you're stuck in your tenant calls, renovation payoffs, or bookkeeping, when are you thinking about the long-term strategy? When are you backing up to look at that big picture? That's where your CEO days are coming in. And I thought of a fun one. It didn't happen last quarter. I'm hoping this next quarter, but go somewhere. You can have a retreat with yourself if you need to get away from kids, maybe a spouse, just to give yourself time to focus. There's always something that can come up. And so go on a solo retreat, and even for a staycation at an Airbnb yourself, and really work on this. So CEO days are where you're going to take dedicated time to review your financials. You're going to step out of the day-to-day, not answer the emails. That's my hard one. And create that strategy. You're going to work on the business, not just in it. So yeah, organize one of those that sounds like a great plan. So once you're able to do that, you can come back clearer and know those next steps that you need to be doing. And I think that's a great way to really think of this week, and everything we've learned is the different strategies, the bringing on VAs, all the different pieces, creative, the creative buying processes that were all mentioned. Is, could you look back and go, could I do something different? If we're always in the grind, we really have a hard time. And I know that's where a lot of us as investors and entrepreneurs need to give ourselves more time and not feel guilty for that as well. So that's a big secret that I'd like to share on that one. So again, kind of going through this agenda here, review those financials, look at your tax saving checklist. You said you were going to have another meeting to hit the 14 days. Can you squeeze another few in to get that deduction? Did you look at some comparables? Did you document those things that you need to do? Also, you could be making plans for your next hires or hiring your kids. If you have kiddos that can be learning in your business, I think that's such a great way to help them get more established and be keeping more money in your family as well. And then be reviewing your vision for the prior quarter. Where's your wins at? And what worked well, and what do you need to change moving forward for those next goals? And then setting time to review that with your financial advisor and your tax strategist would be great next steps as well. So pulling this all together is accounting. Secret number one, that's your foundation, right? That's going to be the core of getting this all together. Number two, your separations, to give you clarity, what's truly happening on each of those rentals, separating them, right? So that you know, well, one property is doing better or not so great in the other property. Your financial reviews gives you the control, so you know what's actually happening in your finances. Your KPIs gives you that insight so that you can make those decisions and trends. That's a big part, seeing those trends and catching it. And your CEOs for growth. And those will all lead to tax savings. If you're doing all the things so that you can have that strategy throughout the year, you're going to be saving more money, tens to tens thousands of dollars, tens of thousands. It's going to be quite a bit. So some real world wins, kind of just briefly touched on. I've really given those examples throughout the presentation here, but dialed in accounting where you're identifying those issues. You're separating your personal and your business to make sure you have you're not missing those deductions. You're reviewing your finances to get your strategy great with your CPA. Like I mentioned, I mean, saving $45,000, that's a down payment on an next rental property in some areas, right? So that's pretty significant. Tracking those KPIs, like I mentioned for my own business, and seeing real growth happen and having those CEO days to actually do them all and get them done. Not a, it's end of the year, right? It's not a hope for the best and playing defense. You're playing offense by really giving that time to yourself. So thank you so much. This is me at the condo that I bought that in Florida as a short-term rental because I don't qualify for real estate professional status, being a full-time tax strategist. So I took that deduction, and the day I saw it in person, I was the day I signed to buy it a couple years ago. So I like to share that. I have gone through and flipped houses, and I've also long-term rentals. I'm the CFO for my parents' boutique hotel. So love the real estate world and investing and the tax strategy that goes along with that. So if you'd like to scan the code here, it takes you to my consultation calendar, as I am offering a great deal of $500 off if you book a call with me and you decide to become a client, and that is gets you a year-round strategy, entity optimization, quarterly profit reviews. Anybody here would like to have a partner with them to go over those, right? Instead of doing them alone, or teaching you how to read your financials to make those decisions. And then putting together a financial plan as well to get to your financial freedom number. And then a bonus, of course, we have to have our taxes prepared every year. So those would be done as well. And happy to have a call with you and go over that as well to see if that could be something you could get a benefit from. And any questions? No, that's a lot of information, but hopefully I kept weaving that in so it all really came back to the importance of these small steps can make big changes.
Sheena, I was wondering if you have walk-in appointments because I'm able to fly to Spokane. Didn't know if you did face-to-face or just online only.
I primarily do virtual as I work from my home, but we could meet at a co-working space or a coffee shop. So yeah, if you're able to fly in, I love in-person visits since we do so much virtual. Where are you based?
I'm in the Dallas-Fort Worth Metroplex.
Okay. Yeah, would love to
But
have
why not make a business trip out of going to Spokane?
Exactly. I love your style.
Sheena, do you have a room she can rent and then you get to write off your Augusta?
Yeah, well, my parents' hotel is not too far. Yeah, I don't have a rental available in Coeur d'Alene at this time, but that's in the works. I miss the flipping side of real estate, the design. It lets some creative juices go out in a different aspect. Mhm.
I have a question, Sheena. I think one of the things that sets you apart from some other CPAs out there is your background with real estate investing yourself, right? That you have worked alongside your parents with their boutique hotel, that you've done the flipping, that you have your short-term rental, right? That you have this experience in these different fields. I'm curious how your personal investing maybe has shaped the way that you advise clients. Like if there's some things that you're like, oh my gosh, I know about this, or I tell people this because of my own experience, that they're missing out on if they use a CPA who doesn't have that personal experience.
Yeah, thank you. I appreciate that insight because I will say I've had so many clients come to me that said they bought a property and they were told by their previous CPA that you can't do a cost segregation study. We're not taking bonus depreciation. And I get it. It's taking strategies that are not, for me, they're very everyday because I'm an investor myself, like you said. So the fact that I do it and know it myself and understand that, yeah, there are certain things that come up with real estate investing that are very different, but it's being very familiar with those strategies and going, okay, well, what do you need to do to be able to qualify for real estate professional status or looking at it that way. I'm seeing a lot of CPAs as well that aren't familiar with depreciation and they're really getting it incorrect. So not let alone they're not letting you take those strategies that are completely legal, right? That's what people get afraid of. They are. You could do the cost segregation study, you take the bonus depreciation, but they just don't know it, so they don't want to do it. And then they're doing depreciation for rentals incorrectly. And that's causing you to lose a lot. Like I was seeing, well, you should have been able to take that deduction, and they told you couldn't.
Very good point. Thank you, Sheena.
Yeah, no, something so important. And as a business owner myself too, so have the S corp myself and run those strategies I give where I'm confident to say, yeah, I know because I'm doing them myself, running payroll, all the things that need to come with it. I'm going to walk you through.
So
Very
Sheena,
nice.
do you do both the bookkeeping and tax strategy and tax preparation? Do you do, I say both, and then I said three, but do you do all of those things, or do you just focus on the tax strategy and the tax preparation, and then we bring our own books?
So my core offer is, or that I do, is the strategy and the preparation, and then I have a CFO add-on where I do the bookkeeping as well. And I call it that because I go beyond bookkeeping, where we're going to have more discussions and more cash flow forecasting and forward thinking than the just bookkeeping side of it. So you're getting much more that way.
So if we already have our bookkeeper that I mean, I love my bookkeeper,
Yeah.
but I need a I don't really have a tax strategist. I just have kind of what you were saying at the beginning. I hand him all my stuff and he does it at the end of the year. And
Mhm.
I don't really have planning that goes along with that, but I have a really good bookkeeper.
Perfect. Yeah. So for that, that's where my core offer here would be the strategy and preparation, where then we're meeting to review what your bookkeeper has done. And also, if there's anything, I see even great bookkeepers will have trouble with what should be a capitalized item, like that should be depreciated because say you put in a new HVAC and they think it's a repair, we can still get you a great deduction on it, but it needs to go on the balance sheet. And those are things we can catch early on too and have those discussions, but then also go, okay, here's where your profit stands. Here's where we're projecting. Now here's the strategy that needs to help reduce your taxes.
Thank you.
Mhm.
I do pass through since I only have one property for taxes, and I've been
Okay.
doing my own taxes. But I'd like to get more professional with getting my own taxes done. So you do personal taxes as
Mhm.
well as separate business entity taxes like
Yes.
LLPs. Okay.
Mhm.
Thank you.
Yeah.
Fabulous questions. Please make sure, guys, that you are scanning. And the great thing is, if anybody's watching this on the recording, they can go scan this as well. Oh, except it's only for, you'll still get there. You'll still get there. You'll still get to do the
You'll,
consult.
yes. Benefits for showing up live for everyone that's
Yes.
made the time, right?
I love that. I love that for sure. All right, guys. So make sure you get that. And one last call. Any other questions for Sheena before we wrap this up? All right. Well, thank you again, Sheena, and everybody. If you want to watch this again or have any other questions, We're going to send it out as soon as this gets processed in Zoom and we can get it over on YouTube. We're going to send the whole series out via email. So keep an eye out in your emails for that. And again, just thank you so much to everybody who came. And I hope this is really transformational in your real estate investing journey and growth.
Thank you.
Bye, guys.